26. I'm Mark Gardner. We strangely saw stocks retreat overnight, or the indexes very much so, as investors rotated out of tech. So it was definitely a night to look at the market map. As you can see, this half of the heat map of the US, particularly those carefully watched monetizers of or potential monetizers of AI got absolutely hammered, like the Adobe's, the Salesforce, ServiceNow. Broadcom is down quite significantly as well for them. And we had AMD report earnings after the bell. They beat by a good margin on top line, bottom line, and on outlook. But basically got hit about 4% in the aftermarket. So that's obviously pretty poor price action in terms of in terms of what's going on here at the moment. But you can actually see the more defensive stocks, Berkshire's, etc. The oil sector got a bit of a better bid. These consumer staples like the Costco's and the Walmarts, etc., also catching a bit of a bid tone as well. Brokers actually starting to upgrade those. They were sort of friendless for a good, probably sort of 6 to 9 months, but I think they're worthwhile having a look at the likes of Costco and Walmart, etc., because I think all the bad news has very much been priced in, while people have been shoving all their money from these sectors into this the AI, semiconductor and memory and storage sort of sectors. There's really not a. I think Microsoft just continues to grind lower. Looks technically really horrible at the moment. Nvidia not looking overly good either. I think overall we just probably want to be a little bit careful, because as you can see, these squares are weighted to the size of their market cap. We're talking if these guys catch a cold, the rest I would say that we're in for some trouble for 1/3 of the weighting of basically the S&P 500, and obviously more than that for the Nasdaq. It'd be interesting to see. I mean, there was a little bit of movement in the materials sector and things like that as well, which I'll go into more detail tomorrow. Project Vault, which Trump's extraordinary at naming things. It's really what they've done for years, where they just stockpile certain critical things to the economy to shore up supply chains. It's usually done in times of war and things like that. There's certain mandated amounts of grain, amounts of all sorts of stuff that they need to hold. But they're now adding critical minerals to the mix. So rare earths, particularly heavy rare earths. They're obviously providing subsidies for magnet manufacturing and things like that. Silver and platinum made the list, which was very interesting. Maybe Trump's got barren long silver and platinum over the last couple of days. Who knows? We recovered really nicely yesterday, despite the fact we had a rate hike here in Australia. Pretty hawkish rate hike too, I've got to say. I would say, one and done is definitely not happening. They're talking about the inflation really not being tamed until the start of next year. That would probably imply they don't give forward forecasts, no matter how much. Watching the press conference is the most painful thing in the world, because each journalist just literally rewords the same question: "What are you going to do next month?" And they don't give forward forecasts. But you can basically, if you can do 2 + 2, you can add up to the fact that we're getting at least another one next month, if not, and then maybe another one the month after. Private demand and private consumption was the main driver, as much as everyone wants to blame Albo on Twitter. And they're saying that some of the inflation may be transient, but a fair bit of it's persistent. And whilst people are obviously, it's going to hurt them on a mortgage standpoint. In the long run, keeping inflation tame is much better for young Australians and the middle class on the lower class than a move up in your interest payments, etc. So just that it obviously is an immediate bite to your budget, basically, or immediate effect to your hip pocket. But the rest of it, taming prices does make sure that your cost of living, you probably make it back in your cost of living over the course of time. So as you can see here, S&P was down 0.85, Nasdaq was down 1.5. They were down 2.5 at one stage in the Nasdaq. First daily sell signal on all the technicals, on the average of all the technicals in a very long time. S&P and Russell now neutral on the daily, which it's been a long while since that's happened as well. The weekly, actually, since we've been doing this, it's been nearly 5 months since I started doing this. That's the first time we haven't seen a strong buy in any of the US indices. It's still a buy in the weekly indicators. So that's a little bit surprising overall, which means it's probably just gone sideways for a period. It's still not negative, but it's interesting to see that long-term weekly change as well. So Nikkei just running around like a headless chook. At this point, Korea and the Japanese index, just you just need to ignore them because they're limit up one day, limit down the next day. It's just it's a disorganized mess. So not really worthwhile paying any attention to in the broader scheme of things. We did recover to be flat from where we were after the RBA, and it was a surprise. It was very much a surprise how hawkish they were, but it was about 70%, but maybe towards line ball on a hike. But yeah, no, the hawkish tone of it was. I think the REITs and the banks did relatively well to hang in there as much as they did, and tech particularly actually kind of rallied. ATech, which you wouldn't expect from growth stocks. We stabilised in silver and gold and platinum. They're up about gold was up nearly 6 or 7%, knocking on the door of 5,000 again last night. Only down 4 for the week. Silver still down, I don't know, 20 to 25 odd for the week. That price was the absolute top. But I think that's. I wouldn't say the coast is clear necessarily, but anything from here where it's just mildly sideways and stabilising prices and calming volatility we'll probably see a bit of a grind higher for those of you who still have them. You probably want calm. You don't want a reversal. You want the volatility to come out and a grind higher in those. Coal up 5 for the week, but down a little bit overnight. Bitcoin got fairly walloped. It's down nearly 14 for the week, but it was down. It hit its lowest mark last night, a 52-week low apparently. I saw an alert come up last night. So, and lithium making a minor recovery as well, I would imagine, on Project Vault. They were signing the government shutdown resolution and this Vault thing, in the last hour or two. Didn't really. I was a little bit busy and wasn't able to hear the meandering press conference that Trump had about it. So I'll get some more details on it. But I don't think it's anything particularly new. I think he's just formalising that. A bit more of an organised structure instead of just throwing money hand over fist at random things, and backstopping prices and things like that. So I think it's more about being a little bit measured about it and making sure that they've got, and locking down their supply chains, which is a good idea, because that is the concern overall. So, every now and then, as much as it's breakneck speed with Trump, he does tend to get to the point in the end. So, sometimes he just does it, in a wrecking ball kind of way. Palantir, as you probably saw on that heat map before, was up 7% overnight. They smashed it yesterday afternoon. AMD, as I said, was beat on every metric, but was lower in the aftermarket. I can probably do just a very quick check on that now. And then we've got Google tomorrow morning. Wow, AMD is now stretched to down 7.6% in the aftermarket. So that will be that's pretty poor price action for something that beat analyst expectations. Google's tomorrow, tomorrow morning, and then we'll have Eli Lilly as well. Amazon on Thursday. I don't think anyone cares about the ECB rate decision. US employment on Friday will be pretty big, although there was some murmurings out of the BLS about delayed figures, so I'll have to double check that that's definitely going to be coming out on Friday. Philip Morris on on Friday for earnings as well, but some of the big European banks. But it seems like a calmer week at the moment, despite the fact that there's still a fair bit going on. So, Mosaic, go to mosaic.mpcmarkets.com.au. You can scan the QR code down there for less than a coffee, your daily coffee, and you can basically get Mosaic with 4 recommendation services. Buy and hold, alpha, US, global, ASX stocks, ETF portfolio, content, podcast, education, news. Conservatively 70% win rate across all of those stock recommendation services in the last 12 months. Obviously it varies. It's available on desktop, App Store, Google Play. Recommendations gets pushed to your phone. The first month's free. It's only $149 a month. So go to Mosaic and you can get all these things in real time, which for the precious metals fans that got caught holding the bag, I think you probably $149 a month would have been you would have happily paid that for the sells we got out in on Friday in some of the gold miners, etc. So it's worthwhile going and checking it out and getting your first month free. You can cancel any time, so it may not cost you anything if you cancel within the 30 days. Well, that wraps everything up for today, and hopefully we get a little bit of a grind higher over the course of the day on the ASX, and we're starting to come into earnings. So I think REA might be Friday is one of the first tech ones. I think the SPI was only down about 20 as obviously the commodities have done fairly well. It was all tech related overnight and AI tech related, which is not really anything to do with our market. So I would expect us to survive a little bit better, and maybe the interest rate sensitive parts of the market might be a little bit dour just on the basis of there'll be a fair bit of hyperbole in the press today about rate hikes. So but have a great day, everyone, and we will speak again tomorrow.